Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Can I please get a stream and audio check? Thanks, Marty. How we doing in YouTube? Thanks, everybody. 1 second. I'm having a little audio thing here. Let me see if I can fix it. Maybe not. Okay, maybe. Okay, welcome to the Trader Lab, guys. I am your host, Tom B. Thanks for visiting the lab today. I stream live Monday through Friday, 11:30 to 1 p. Eastern Standard Time. This stream's about integrating Bookmap order flow tools with auction market theory using the volume profiles of chassis in the intraday developing time frame. Thank you, Stephen. Thank you, Dan. So you guys understand, I am streaming from Costa Rica, and this has a somewhat questionable infrastructure. Power comes and goes, internet comes and goes, and if that happens, I will drop out. However, if you're in YouTube, it will continue, so just hang tight, as they say. Is that correct, Dan and Stephen? It'll restart automatically in YouTube after drop. Okay, so if you're in YouTube and I drop out, it takes just a few minutes for this to recycle, and then in theory, I'll be back. We have monkeys down here that swing on the trees and the vines, and they kind of like the fiber cables, so they swing on that too, so that could be problematic. Anyway, thank you for visiting Trader Lab. And I hope you all had a good holiday if you're here in the U.S. and that you have now recovered. General disclosure, all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Also, I have some announcement for you guys today in case you missed it. There's a Black Friday sale. How about that? You can get 50% off Global Plus and quarterly, and 50% off data, and this is for 3 months, and that's from November 28th through December 31st. Also, Cyber Monday, which is today, 60% off Global Plus monthly and data 1 month. Now, you should go to bookmap.com to get the specifics on these, how long the discount goes for, things of this nature. And then add-ons, 50% off. And this offer is valid from December 1st to December 31st. So, very important. And one more piece. There is a Pro Trader webinar series going on right now. And Robert Rother just did his, I believe, and these are Eastern Standard Time, correct? So we have Frank this afternoon, Austin Option Millionaire, Massey, and AB Legend. So these are available to you, and they will be posted on YouTube in case you miss out. Same as with Trader Lab, these are always posted immediately after the stream. Plus, you should review them so you have continuity with this process if you find it interesting. Now, let's try to get to this. By the way, I was having a bit of a hardware problem this morning, so I'm not going to be able to show you some of the charts I like to show you from Investor RT, my higher time frame. But I did lose a monitor this morning. I'm not sure if a monkey came in here, but this morning it was rather pandemonium in the hardware department with crashing and a lot of things of that nature. So I'm going to be working on that this afternoon, just so you know what I'm doing. And it's very hot down here by the equator. Costa Rica is just north of Panama, and it's in the high 80s out here, and rather tropical. So RTH open. Now, I included Friday's RTH, partial RTH session in here because it was the last auction and it wasn't compressed like a lot of holiday markets are. We had good range, we had decent volume. So I included it. Now, this is a judgment call. There's no hard and fast rules. I am an auction trader, so for me, I kind of look at what happened here. Does this have any meaning or is it just noise? Well, it had a viable auction. So that's where these levels come from. So let's go take a look. This is yesterday's low. And hold on one second. Yesterday's value area low, Friday, I should say. Naked volume point of control. This is the retail price at 54. Settlement, yesterday's high. Now, a little bit more to this maybe. If I can find it. Let me just find what I'm doing here. Okay. I'm trying to look for some levels. Where was the ETH high? I think it's covered up. Can somebody post that in Trader Lab? For the ES. And there's a reason why I need this, so, but I can't do it. I'm monitor short. Right above yesterday's high? Okay, thank you. 64.5, thanks, Marty. Okay, 64.5. Now, this is interesting. We have yesterday's high or Friday's high, and what's above Friday's high? Stops. But what else can it tell us? The retail price or highest volume was at around 54-ish on Friday. Let's think about how the auction works. This is high volume or retail. The market is really shopping. So high volume is retail. The high, of course, is we're not paying this anymore. I'm out of here. And now in the ETH, which is the previous auction to our RTH open, if the ETH high is here, might it be saying, this is always the maybe, this is the question, might it be saying this is too high? Might it be saying if we open below the retail price that this is too high? And might this be saying if we gap and we're under, so we gap lower, let's go a little further, here, we're outside of yesterday's range and outside of yesterday's value, then might what's above us be too high? Now, let's go a little further. From the ETH, this is called the overnight volume point of control. It is the retail price from the most recent auction. So what I always suggest in Trader Lab for traders is to try to identify the side that might be in control and then align with that side. Here's a little bit more. And I wish I could drag some charts around, but it would make a big mess. We've had one-time framing up since we had the big down day, which I think was Tuesday of last week, and I can't remember because I can't look at these other charts. And then we started the squeeze. So we squeezed, I don't remember which day it was, but I think we've had 4 days or 5 days up. You guys can comment on that if you can help me with that. But so one-time framing, the market was short, and what does the market do? The market goes up to go down and goes down to go up. So we had the big sell-off. We went down. We opened a little bit higher the day after, went down, got shorts there, and then we squeezed everybody on that big down day. Now we did the opposite, up, 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 up. What are we doing? Squeezing the shorts. So what might happen? Well, if we have longs in the market who have not been properly abused, now why would I say that? Because the market goes up to go down and goes down to go up. So we went down on the big sell-off day to go up, okay? So if we went down to go up, that puts us in a situation that we might go up to go down. So if the up was Wednesday, we were closed for Thanksgiving in the U.S., and then Friday, then the possibility is to go down. Now, after that, don't know. So let's see. So what we're looking for here is RTH open, which is 8:30 Central Time, right? Coming up right here. ETH, overnight volume point of control. And now let's go to our context grid sheet. We're opening out of range in a gap. Is the market responsive? Now, what does this mean, responsive? And there's a little bit more to this. First of all, what is the condition of the ETH? It's lower outside of Friday's range. So right there, we have shorts in the market. So in all time frames, as I think of it, or you think of it, I think of it a little differently, but call it auctions. If the market goes down, there's buy stops on the other side. So in any time frame, in the developing time frame here, the clock is not something I use. I use the participant behavior. But other than that, sessions are time frames. RTH open close, you have a day. ETH open close is a session. Okay. So, but this is developing. So the thing is, once we have a session closed, we can look at what it says. What this says is the retail price is here. Yesterday low is here. And if the ETH is short, we have possibility that longs going up till Friday might take some profit. We also have the possibility that shorts from the ETH and new shorts that might come in here get squeezed. Always the possibility. So we have to be prepared for both scenarios. So the first thing I was looking for this morning was selling. Now, the thing we have to be conscious of is if we get early selling, we can then get a short squeeze, and then subject to the squeeze, we might get continuation selling to get short again. So that was my primary thesis for today. And what I always say for developing traders is to define context, stay with the dominant context until it changes. And this is not about counter trend trading. This is about alignment for developing traders. If you can trade with the dominant side and also recognize change, if it happens, then if you can do that, then you can go further and start with the counter trend. If you can't trade with dominant side or define it, then you're going to have a hard time, in my opinion. So one piece at a time. So let's take a look. So we know the ETH is short. So I'm going to show you some behavior here. And I'm going to go into microstructure, which what I like to do. By the way, if you have questions, please post them. I'll do my best and remember, I'm in Costa Rica. If the stream drops out, it'll take a few minutes for it to recycle over here. Monkeys do like swinging on the cable. Don't know why. Sometimes they swing on the wrong cables and it doesn't turn out so good for them. This is called the variable high volume node. Made it up? Who knows? What is going on right here? Let's look. So this is the open. We're in 30 seconds. So what this tells me is right here is a retail price. And notice where it is at the overnight volume point of control. So this was our retail price. Break high, new retail price. Follow the story. So this is the auction. Now, when we first opened, of course, a lot of volatility, very fast, not a place for developing traders to trade. It's a place for developing traders to learn speed reading. And that's really how I think of this. It's very fast and not tradable until you develop unconscious competence. But it's a great place to see auction mechanics. So this is the retail price from the ETH. You'll see that little node sticking out. This is a microstructure. It's a consolidation. And right there is the retail price. So let's just follow the shopping experience. I think of it as shopping. It was very simple. You know, we make trading very complicated. Well, how about if we simplify it in the sense of not being able to predict anything? That hasn't changed. But being able to be more aligned with what might be happening. So then when we see change, we can then anticipate behavior. So right here, the developing volume point of control, that's what this is called, moves higher. What does it say? Potentially, this is too low. This is my support. There's the test. Now, when this happens, this is too high, this is too low. If that's too high, I come back to too low. If this is too low, I come back to too high. If I break above too high, it now can become too low, right? Is everybody with me? Mark, yeah, I'm in Costa Rica for a couple of months, but no, it's not a vacation. It's just moving around. I'm what they call a digital nomad. So we break high. Buyers are here. If you look at the delta, you can see, well, of course, the open doesn't really matter much, but there's our sellers. Where are our buyers? Less buyers, more buyers, less sellers. Look at the buyers. So now the buyers, we can see it in the delta. Here's the counter rotation to support there. I'm over the overnight volume point of control. And now I was going to give you the context sheet. And I forget this because I'm a bit distracted. Okay. So we opened out of range in the gap based on Friday, don't forget. What does it mean? The market's out of balance. So we're not at the moment accepting Friday's range. Is the market responsive? What does responsive mean? If we get an, and don't forget, the ETH is short. So is the market responsive? Well, the ETH inventory is short, but the RTH, the one-time framing up inventory, is long. So I've always got to think from both sides. So it's possible we get early sellers, and then we get buyers, and then we want to look to see if we want to get short. So is the market responsive? Well, it is. These are responsive buyers for the potential ETH rebalance. Okay? Because they're short, right? ETH high tested yesterday's high, Friday's high. That suggests we're short. So if the market is short from the ETH, they can rebalance. Remember how this works. Write this down. The market goes up to go down. The market goes down to go up. In the ETH, market goes down to go up. And in the RTH, the market goes up maybe to go down. So anyway, too low, maybe too high. Test here, too low. So looking for it to continue higher. New retail price. What is this? Variable high volume node. What does it mean? Maybe too high. Now we get our counter rotation. Now there's something else we have to remember. Opening swing low. I'm going to change this because there's going to be stops under there. And we have to figure out where our opening swing high is, though. So opening swing low. All right. So there's the longs in here are going to have stops under here. And if we get a counter rotation or selling, then the buy stops will be wherever this swing is. This is my micro high volume structure. I get selling below here. Sellers are now below. This is my retail price. And I test the high volume here. Think of this like a store. This is just how I relate to it, or an easy way to think about it. I think easy is good. Doesn't mean right. It means a way to slice and dice the market. So I have sell stops under here, and wherever the high happens to be, I'm going to get stops on the opposite swing. Right here, the market is too high. I break, test. This is a potential short to here. Now, remember, for me coming in, not saying it's right, I want to be short. But I have to be careful, like always. This is my scale. So I have break. Buyers are there, sellers are here, which I don't know until the sellers get below the buyers and I'm below this high volume. I break below, so too high, break here. This sets up a short to scale ahead of this, okay? Because this was my previous retail price. So let's just see what it does. VPOC migration. Maybe this is too high. Maybe it isn't. Let's find out. So, and this is not really tradable unless you've already, you're already successful and have an edge in other time frames, as you think of it. This is micro. This is happening, and we're in here 1 minute. So this is a lot to take in, isn't it? And process. Remember, this is where our scale is. There. And there's absorption right there. So you see the red delta? Those buyers are here. Why? I got sellers. Didn't go down. What does it mean? Potential counter rotation. Where's my resistance? Isn't it there, now, and there? If this is too high, I can push off and take these guys out. If this becomes this is too low, I can go back here and maybe squeeze the shorts out. Remember how the market works. If there's longs in here, there's sell stops because there's sellers built in here. If I get my shorts in here, there's buy stops always on the other side. Does that make sense? I'm getting questions about this digital nomad thing. Last couple of weeks ago, I was in Mexico for a month. So now it's a couple months here, and we'll see. Could be 3, but I'm thinking 2. So anyway, too high, too low. Too high, resistance is here. Break. Too high, if I get under here, and what do I got down here? My buyers. So I'm going for my buyers, okay? So far, it's shorts. So let's watch. And what's up here? Opening swing high. So I'm coming down here to get these guys. I'm coming up here to get these guys. How does it work? Longs, sell stops in the leg. Shorts, buy stop in the leg. Longs to take these guys out. Now, let's come back here and watch. And there's more. Remember I gave you the context. What do? We opened out of range and out of value. That says too high previously. So now, shorts. That's, hold on. A little hard to do this. Okay. Variable high volume node, opening swing high. So the idea of this is get these guys, take them out, take them out. Now, it doesn't have to do this. If we got below here, then it would be continue lower. So it didn't do that. That's still okay. Not thrilling, but okay. So let's watch. This is support. And for me, not saying it's right, never can say anything is right. As long as I'm outside of Friday's value area, which, did I lose it? Guys, value area low from Friday. $46. Is that value area low? Yes. 45, I'll take it. So see, if we're out of here, out of value, then we can get responsive buying. But as long as we're out of here, it's still sellers. So for me, I'm only looking at shorts unless we get back up in here. And then it's the test of this and either continuation shorts or nothing. Let's see what it does. This right here is an order flow trigger. Let's watch it. I'm over the opening swing now. So I got to be kind of careful, right? Always have to be careful. Is that yesterday's? Yeah, yesterday's low. Let me give you some statistics, guys. We opened lower out of range. Taking out the first hour's higher low, 98% probability. Taking out the ETH higher low, 91% probability. Taking out the ETH low, 72% probability. Taking out the previous high or low, and here I'm leaning at the low, is about a 68% probability. Now, what does that mean? That means fill the gap. A 45% probability to get to the previous value area low. Okay? So, and the previous point of control, about 30%. Now, those are only statistics, and past performance is not necessarily indicative of future results. What does that mean? For me, I'm still on the short side. And when I say that, I'm saying for developing traders, unless it changes, we're out of balance. Now, this can be kind of controversial because, and again, I want to come back to a concept here. The concept is, depending on your experience, stay with the dominant side until it changes. Now, has it really changed? This is a matter of time frame and also your metrics. Because if you start taking counter trend trades without being able to trade with the dominant side, even though you're going to take stops no matter what you do, you're probably not going to be able to sustain yourself. So it's about dominant side and then defining change. This is not a business of video game and flipping and flopping. You've got to be able to recognize change and define it before you go on to trading inside of a context and fade it. So go slow, be intentional, and build the plan out. And a lot of developing traders, just to remind you, a lot of developing traders don't even understand what FOMO is because they're in such a hurry to click the mouse and the dopamine fix without having an edge that they put themselves out of business. So it's just a little friendly advice. So this is an order flow trigger. Let's look at this. Now, this is advanced. This is not anything anybody ought to do. I'm just going to throw this in here. So break high. This is support. And we still have overnight mid, which has about a 75% probability. Past performance, not indicative of future results. And we have this thing, value area low, which we have to get in. We have to clear this for us to potentially come through it. So, and it's not a line, here's the thing. Value area 7, and this is market profilage. 70% of the volume, and that's considered like one standard deviation. It's actually 68%, but 70% of the volume took place in above this value. So this is the outside edge. We can test inside it, and if we don't accept it, we can reject it. If we reject it, then we have the possibility of coming back and getting the ETH low. Remember where ETH high is at yesterday high. So in a way, as traders, it's kind of a forensic thing. What are the, you have strategy, but you're trying to look at the evidence and put a case together. It's kind of like a detective. What are all these probabilities? And how do I evaluate the progression of this story? And it's always going to change. And the other part, just to kind of make you nutty, is it's time frame specific. Some traders are only going to, they're going to look for these outside edges and put this thing on and go for a large range. Other traders are going to be trading shorter ranges. This is a potential long in a time frame or not. Oh, nice. I got a mosquito. Big one. Boy, this guy needs landing lights. Holy mackerel. Landed on the screen. Some of the things that land on the monitor, I got to tell you, it's questionable. So, order flow, liquidity. Yes, it is the rainforest here. And I didn't understand what the rainforest meant. It rains. Who would have thought? Actually, this is not the rainforest where I am, but I've been to the rainforest. Very wet. In the canopies. This is, hundreds of feet high. I don't mean to talk, this is trading, so I'm just saying but it's very unique. So micro high volume structure, break low. Now, this is your support. Let's just see what it does. And this is your retail price in the developing time frame. This is, what was this? Retail. So what do we know? Retail price. If I get a short there, and this is an order flow trigger, break low. Let's look at how this might work. I'm going to take you back now to microstructure. Now, when I'm doing this thing, it's not that you should trade any of this. It's that you first learn to understand what you're seeing. What are we looking at here? I always ask myself, what am I looking at? Because I don't know what it's going to do. So we're not in the business of what it will do. It's only what it might do. So what might it do here? Well, this is my order flow. Break high. Absorption was there. That's what that delta is. Selling delta, what do we think? Going lower. Not so much, Tom. There it means there's a buyer, a passive buyer. Break high. Support. Microstructure. Not a long. Support. Why would it not be a long, you ask? Because we're in a gap, we're out of balance, and we're outside. And don't forget, there's a high probability we come here, but we don't have to. We don't have to do anything. Break low, microstructure. Right here, the sellers take control. We come back and test. If this high volume in the mini mart is too high, we break away from it again. Now, this right here, where the buyers were, that's why I did this. The sellers are there. There's the icebergs. The buyers are there. Sellers are in control here. If I break and I come back to where the sellers took control, I can sell it if that's my trade. Okay? Watch. And then where's retail? Well, I got it here, and I got the mid and the VWAP. So it would be prudent if you sold this or sell this, it'd be prudent to scale ahead of the mid and the VWAP, and then this is reversion, and then maybe fall out the bottom. Let's just see what it does. This is a structured trade. There's the retail price. Why would I go from retail to order flow trigger? This now is support. I can either do this and that and not be thrilled, or break low to this, which was a former retail price, and test this. So this is all interactive mean reversion. Are you guys tracking? Is this good? By the way, reminder, if you're looking for Cyber Monday deals, go to bookmap.com. If you ever wanted to get your hands on Bookmap at a phenomenal price structure, I would say now's the time, because this is when they have the best sales. So if you've been thinking about it, check it out at least, and then see if this kind of a high-tier order flow tool will give you additional edge. So too high, break. I'm not paying that. Too low. Why is it too low? Because this is the retail price. What if this is too high? Then we come back to what was too low. What about this? Retail price. Break. It's too high. I'm out of here. What about this? I had buyers here. Break below. I'm not paying that. I'm out of here. What about this? Break high. It's resistance. Break low to support. It's resistance. Break low. This is resistance. Oh, I better mark that. Watch. So what I'm showing you guys is how to read the market in real time. And I'm showing you, and you guys should take screenshots or, watch this again and create a playbook of how to read and navigate real-time distribution of behavior. This is what the profile can do for us. And the thing I have to remind you again, this is not how you need to, this is not necessarily what you should do as far as trading goes. This is what you can do as far as understanding what's happening in the more shorter time frames. And nobody knows it's going to happen here, right? But when I see the change in behavior, I can start understanding what creates behavior. This here, as an example, is an auction. And all it is shopping. You go to the store, what's too high? They're not willing, you won't buy it if it's too high? Okay. But it's on sale here, which is there. So I have lack of buying, and I have buying here. And high volume is this node sticking out. If I break under the node, I can come back and check it. And what I'm checking is where the sellers took control, right there. And that's what that high volume node is, like the retail price. It's the same as the VPOC, except it's in a shorter time frame as you think of it. And this is the outside edge because the buyers were here and they lost control. So if I come back to where the buyers lost control right there, I can look at that as a potential short. And if it's too fast, I understand completely. But what else do I know? My buyers were here. That created the trigger. My sellers are here. This creates the trigger. Look at the behavior. Break high, trigger, pull back and test. Up. What about here? Break low, pull back and test. Chop, chop, chop. Buyers here and buyers were there. Sellers took control here. Sellers take control again. This is now resistance. It's opposite behavior, isn't it? To that, that's a short. Now you break low. What is this? Support. What happens to support? Becomes resistance. Short, short, clenched teeth, resistance, break low, resistance, comes down to the next location, which is this one. Support, resistance, support. Watch how it works. Opening swing low, which I guess we didn't take out, did we? Or did we? Mid, VWAP, this is too high. I tend to use high volume nodes for trade management because they tell me, and we get here. So right here, it changes. So you could be monitoring this. If it's below here, boom. I use high volume nodes. I keep it. I'm not saying this is a good idea. I'm just saying it's something I do. And as far as I know at this point, the buying is over and I'm going lower. Here I get absorption, break high, break low. Nothing says at the moment we're going higher until, and even then, we're outside. Where are we? We are outside of yesterday's range and we are outside of value. So everything is saying south for me. Are you guys tracking so far? Let me know. And how you doing in YouTube? Please give a like. This is auction market theory using a volume profile as a chassis. So if we can read the market, we can stay in alignment. And we don't know change until hindsight. So that's just the way it works. We knew anything in advance, we'd all do it. At least I would. But haven't figured that out. I don't try. What I try to do in my trading, and I think it's just the real world, is alignment. And until it changes, I stay with what I perceive to be a dominant side. So this is too low. This is too high. Break low. Going to zero. Right here is a microstructure. Let me just show it to you. Now, when this happens here, this is your high volume. One moment. Okay. This is your high volume. Break high. So this is the first suggestion that there might be a counter rotation. Okay? Thanks, Dan. And this shifts down. So this is our retail price. And let me explain the difference between this and this. This represents the highest developing volume for the full day or the full RTH session. When I go down in time frame, and these are not regulated by the clock, they're regulated by the behavior. Just so you know, when we talk time frames, because I often get a question, is this 5 minute, 2 minute, what are you doing? It's no minutes, it's behavior. What does it take for the participants to determine a price? So this here is where the buyers are. That's absorption. Here I had my sellers here. So my sellers are there. My buyers are here. And I have no clue. It's not my job. Not my job. So as far as I know here, going lower. I get my sellers. I have my absorption here. Now the thing with absorption is to understand it's kind of like Pac-Man. You can have sellers, but the buyers are on the other side. Well, do the sellers overwhelm the limit, the market? So the delta, so what is delta? It's sell stops. There's 105. Thanks for playing. And shorts, new shorts and sellers, and stops are market orders. So delta's only market orders or aggressors. Well, the passive side, you always have to have a passive participant to take the other side. These guys, these icebergs, are taking the other side of these sellers, which means stops and new shorts. The thing you don't know in the Pac-Man concept is, are these guys going to keep going and the buyers are going to be pulling or getting absorbed, by the sellers, or do the buyers absorb the sellers? So that's your Pac-Man. The buyers here get above the sellers. So, okay. And now we have micro high volume, break high. So this is saying right here, this might be too low. I don't know, Sellers are here, sellers are there, sellers are here. Looks like it's going to continue lower. But what is over here? The buyers again. The buyers. So again, no way to know. Break high. Now here, there's change. And here's where the change is happening, right? Here at this low volume node. I'm going to put a little box around this thing. This is the same thing as I did up on the top. And no, who knows? I don't, so I don't even try. What I do is I narrate and I try to stay in alignment. Mr. Smiles, hope you're smiling. Yes, this will be available at the end of the stream, and there's a whole library of webinars, by the way, in the Trader Lab, as well as a document section, which you can access. There's a pin up there, and tons of these things. Some of these are real-time narration up to 4.5 hours long. I don't have that kind of time anymore. Hold on. Sorry. I was trying to mute that, but I guess I missed it. So this is right here is a too high. So this is going to be my resistance coming up. So I have buyers here, break high, support. Resistance is here. Variable high volume node. If I get above here, then I'm potentially going here. So too low right here. It's got to break down. Doesn't do it. Break high. Trades over when we come above here for me. Now, what am I going to do with this? Great question. Where were my sellers? Here. So I want to look at this. I'm going to extend this out. Try to. So this is resistance for me. But I also know there's stops. Wow. Bookmap has promised me that they're going to make this so it just extends to infinity. So resistance is here, high volume structure, and this was our order flow trigger. Okay, so all this set to shorts up, and this changes, if not here, here. Okay, so subject to, if you're having runners, fine, or not, it's all individual. Now we come back to the order flow. Now, the other thing we need to remember is, how does this work? Market goes down to go up. Market goes up to go down. Market goes down, think it's going to zero, to go up. And then what does it do? Market goes up to go down. Now, what do we know? Order flow trigger, shorts. If I break above it, this becomes potentially support. And what about this volume up here, which was too high? It can become too low. And we have yesterday's low. So right here, I have nothing to do because as long as I'm outside of yesterday's range, and value, I'm only looking at shorts. Now, in the trader lab, we have traders who are going to take longs. They're more advanced. They trade both sides. That's fine. For developing traders, define a side and just trade the side. If it changes, stand aside until you get a structured trade going in the other direction. Other than that, I'm going to suggest don't fade it. So yesterday's low, and there was a probability of getting the yesterday's low 68%. Past performance not indicative of future results. We know that. What we don't know is what is it going to do. So right here, we fill the gap. So the question becomes now, are we going to come back across the range, or are we going to go further inside? Overnight mid, statistically, if I can find it, has about a 68% probability. Okay, so this is still on the hip parade. So now we're testing yesterday's range, and we're still at a balance. So let's watch. So there's nothing for me to do. Value area low. Now here, so what I've done here is I'm inside of the range. I've got the value area, which I'm out of, which suggests to me if I can stay out of this value area, I can then sell it for reversion trading to come back. Let's see what it does. There's a little more here, I think, that I wanted to show you. Okay. Here, order flow trigger. Order flow trigger. Sellers are here. You can see them take over. Here, micro high volume structure, support, micro resistance is there. Resistance. And see why? Sellers took control here. Buyers are here. Absorption. So I have resistance right there and support. So let's see what it does. Break low, trigger. So trigger, teeth chattering. It's a maybe. Don't know. What's why? Value area low. So maybe too high, too low, too high, break low, maybe too high. Where did it come back? I'm going to put a little box around this just so we can look at levels together. Let's look at it. This is where the sellers took control. There. Can you guys see? I'm going to make this larger. What it says. This is the language of the market. So I don't use indicators. What I found was if I can understand what this says, am I better off? Can I interpret it better? Can I be more timely? That's the question. Well, for me, the answer was throw the indicators out. Just stay in alignment with the market and understand what the market truly is. It's participant behavior. So how do we see that if we don't want to use lagging, conflicting indicators, which everybody does, right? Fine. Don't do what they do. Think like a retail trader. Just don't act like one. So right here, I don't know. I see the buyer going through the moon. Well, what happens here? My buyers are here. My buyers are there. So far, what do I know? Buyers are here. There's the delta. Sellers are here. Not so much. Buyers are here going to the moon. Right? Buyers are here. Buyers are there. Going to the moon. Break low. Break low. Retracement to where the sellers took control. This is very important. Look at the liquidity comes in, and this now is resistance. Break. Where's support? Isn't it? here, there, resistance, liquidity. Notice it's dark down here. Passive sellers. Break, watch. Notice where it comes. Why? Buyers are here. Buyers are there. Not so much. Break low. Shorts. What's this? Shorts. What's this? So you can see the shorts are in control. And where does this trade fail? Isn't it over this? Because we have the high volume. So this is my resistance. And where's my high volume? Let's come back to that. I'm going to show you. Now this is micro again, right? We have micro volume in here. We have more volume over here. I'm going to put a little line on it just so we have it. Okay. Break, and where's our test? You guys see it? So I use these structures because they're not an indicator. Volume profile is not an indicator. So, for me, I use this stuff and I can't react here. What I can do though is anticipate. Write this down. You got to anticipate to participate. So for me, even though I anticipate squeezing, I want to be short. That's just me because it's a dominant side. I can sell this as long as I'm outside of value. Okay. Remember, and what kind of buying is this? Is this initiators or is this responsive buying? Now, that's a matter of time frame. So let's just watch this thing. Let's see what it does. So where are we trying to go? Get outside of yesterday's range. Sweep here. Yesterday's low, a sweep. Now, by the way, what do you do with this trade? Let's talk about this thing. Well, if you're selling here, if you sell here, so your stop's got to be above here. That's a bit of risk, don't you think? So this is the location, right? Here, and you have to have your stop above there, and whatever. Now, here's a sweep. And often when we see sweeps, we get a counter rotation. Let's see what it does here. Also, you're inside of the previous day's range. It would be prudent if you took this to be looking to scale ahead of this. Because what happens if we hold yesterday's range? Then we come across and we squeeze. And who do we squeeze? The shorts. So you always got to be thinking, where might you get the opposite response? So this would, and here's your sweep. Scale would be here. We get VPOC migration. I'm going to label it. What does this say? Language says new retail price, and what's below is too low. I'm going to label it variable high volume note. Now remember, I'm slicing this into different time frames. Developing daily time frame is the yellow line. It's called developing volume point of control. And when I go down into these, it's the same process in a much shorter time frame. That's all this is. Very simple. Why should trading be complicated? But because it never changes, it's still random, So if this is the retail price, here's what can happen. If this is too low, I can come back and check what is too high. Where's my volume? Let's mark these in the microstructure. There and so here. So right here, too high, chop, 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 break. This now, and here's the outside edge, this is my retail price, too high. So this is now maybe too low. So if I find too high and I can get below this retail price, I can come back This is kind of how it works. And it's random. That's the other part of the thrill. Now, VPOC migration. What does that say? Maybe that's too high. Let's look at the behavior. And let's look at what was too low. This was too low. So I can go from too high to retail. And if it's now right here, if I break and it becomes too high, I can go back to where it was too low. And I don't know where that is. It could have been here, and reject it. That's unknown. And where's my other target? It's down here or out the bottom, because we have the potential for two-sided trade. And remember, the market is long from the one-time framing up we had last week, pre-holiday celebration. By the way, you should check that out before major U.S. holidays if the market tends to go the opposite direction and take out the weak side. Kind of a nature of it. I've observed it many times over the years where it just will drift in the opposite direction, and it might be, short covering or whatever. And if it's short covering and not initiative buyers, it's possible we're going to correct those, get those longs out. And again, don't know. So now let's look at trade management again. So we come back into liquidity. We have a location. Nobody knows. No clue. You get your buyers. Your sellers are up here. Your buyers are here. This is your absorption. Liquidity comes in here. No clue. Let's look at our microstructure. No clue. And when I see a structure like this, it doesn't necessarily mean I cover. As soon as I see it, I'm going to look at the next level that I rejected, and I don't want to go above it. And it might be too micro for you guys. So high volume is there. And now high volume is here. Sellers are here. Buyers are here. Volume is there. I need to do that to go down. Or if I break high, I don't want to come over this. And I definitely don't want to come over this. So if I was in this, and I haven't been able to trade because I'm having problems here, but I will if I can get things stable, I'd be out here. And I would not be long. Other traders would do the long thing. So I trade primarily one side, and here, so let's look again. So if I understand market mechanics, I understand that there's shorts in here, there's buy stops. I also understand if I get longs on this side, there's going to be sell stops. As long as I'm outside of value, I want to be a seller. Now let's watch. VPOC migration, what does it say? Too low. Notice how we hold it. VPOC migration, what does it say? Too low. And where was resistance? Up here. Well, I get through resistance, so now it's nothing to do. VPOC migration. Current volume point of control also. And at 9:30 Central Time, which I forgot about, by the way, did we take out the IB high? We have something called the IB stat. And the IB, high or low, has a 98% probability to take out one or the other. Now, my lean is the short side, but if it takes out the IB high, I'm still going to look for shorts, but because then I'm thinking maybe a neutral day. But I have to be very careful now, because if I get into value, then all bets are off and I have to monitor the market because I'm trading primarily one side. So here, VPOC migration, what does it say? Too low. So I'm going to mark that in case we come back because it's too low. So I just sequentially go through all this and I try to stay in alignment. And by the way, in case you didn't know, we all take stops. And what are stops? Overhead and cost of production, part of the thrill. So let's look. This still sets shorts up for me because I'm outside of value. So I'm still on the short side. This right here is the first hour's high. I didn't take it out. VPOC migration. What's the possibilities? What was this? Wasn't this resistance? Break high can be support. Break. This is potential resistance. This shifts up. It's either that or this. So if I break low, actually here, I wouldn't be doing anything. I'm going to tell you, I can read it, but I can't do anything with this. It's too fast, okay? So I can't take a trade there, but it would be a short for me. But I also have the IB stat, but I'm still outside of value. So support is here. And we have a trade in Trader Lab. Now, for me, it's not a trade I would take, but others can take it. It's called VWAP or mid to VPOC. It's a reversion trade. To here. So the way this would work is if you're taking a long, you'd be getting your long in here against that, which is too low. This is resistance, and you're trying to go here. And then for the IB. But I would not be buying it up here. I would be buying it here, and I don't buy anything. This could be a long. For me, it's counter trend, so for this stream, not so much. Liquidity here, inside of value. This makes the shorts questionable. Now we have another trade. We have something called the IB continuation trade, which happens here. And there's the liquidity trigger. Let's put a little box around it. So subject to your plan for today, you could be looking at a continuation trade long. You got resting liquidity here. It's a target. IB continuation trade. Right in here. So let's look at it. You got this is support. This is your outside edge. So the way this works is this is your IB. So this is the IB continuation trade. It's here. Now, it's not mechanical because the IB is a time-based structure. It is not auction-based. It's just the first hour high or low, but it has a high probability statistically of getting taken out. What we don't know is where might it come. Let's look at where it might come before we know. Let's come back. What do we know? Order flow trigger here. And what else do we know? We know this, which is a high volume node, is too low. And we know this is an outside edge because of the speed. What we don't know is, are we going to come back here or here? So if I take a trade anywhere in here, my stop's got to be under here. Why? Because this is the last place it was too low, right? Here. So it's taking and this. Let's just mark this. Too many lines, I know. So what do I know? I know that this is the fair price. This is too high. It's resistance. If this becomes too low down there, and I break high, and this is too low, and I break high, notice it shifts, this is too low, and I break high, and I'm going resistance, notice where it stops, pull back, break high, IB continuation trade. So we get the 90% probability. I got my liquidity here. This is my support, but my IB is here, and my outside edge is there under here. Let's watch. Outside edge is here. If I buy it here, my stop's got to be there. If I buy it in here, my stop's got to be under there. That's all I can tell you. So that could be a long. Got to get risk neutral. This is where your resting liquidity is. This is the next level. You're in value, so it's okay as a long. This one. This is just staying with what we perceive to be the dominant side. Now we break low. This sets up something called the IBF. This is a reversion trade from the other side. Now this is a bit tricky. We fall out of value. This is called the IB. Now the IBF for me is qualified. And what it is, it's the opposite of this. And what's really the key piece is this, because I'm falling out of value. So I test in, I fall out. I can take a short here, right? Here. So what I do in this stream, guys, it's not to show you it's to show you how the market works and market mechanics. So let's look again at the structure. High volume is up here, too high. IB, resistance, new retail price here. Now, if I take the IBF, I've got to get below this, which is support, and this is my next level of support. So let's see what it does. Resistance is here. That's my high volume. So you have your IBF, which is here. This is, so let's look at how you would do this. Well, here, if you took this trade, you've got like enough to get risk neutral if you're following a plan that requires you getting risk neutral. Value area low is here. You want to stay outside of value, which is here. And now we're pushing back inside. So again, now we're done with that, with the short. And now we're in real time. And let's see what we got. Next target is this. It's got a 35% probability, but we are now in value. So if we're in value, then we are no longer on the short side. We need to trade on the long side now, unless we fall outside again. So now you are either going to take longs or you're just going to stand aside, because we have to be very conscious at the moment that we can still come out the bottom. Might not do it today, because I think we had a reasonable shot. We're inside of the previous day's range, and we're flirting. Anybody flirt lately? Value area. So you could either be taking longs, going for this, or you stand aside. But the context is no longer shorts unless we fall inside again. And so we do, nothing to do, stand aside. You guys, yes, I'm in Central Time. Yeah, Costello, I'm using Friday's RTH session in value area. I think you could play it either way, but I perceive Friday to be a pretty complete auction. It didn't behave like half days do. It had good range. It had multiple distributions. It looked pretty. Okay, you got to watch now again. This guys, this here, I think it's a pretty tough trade here, because you're really kind of dancing on the edge, of value. You can trade it from either side. I perceive it to have more risk to it. What kind of, I'm looking at these creatures that land on my monitors. They're rather large in the jungle. I am in the jungle, by the way. And you're going to say, well, you don't have to leave Chicago for that. By the way, I saw a scorpion here that was the size of one of those small Jeeps. Oh, Mr. Smiles, you're in Mexico. Good for you. Whereabouts? I was there last month for a month in San Miguel de Allende for Day of the Dead. Not intentionally, pair. Um, if you want to learn market mechanics uh, from scratch, I would say come to Trader Lab. There's a library of webinars. There's also books, um, that you can read in there, PDFs of information, summaries. You just got to wade into it. And market mechanics takes time to understand, especially because we all start with indicators because that's kind of easy. And we spend our time mixing indicators and time frames thinking, and we all have random winners. I always found that to be the problem. Imagine this, you have a winning trade and it's a problem. Well, because it keeps you doing something that doesn't have edge, you know. So, but come to Trader Lab, use the link in the bottom of YouTube. There's no cost for Trader Lab. It's open to everyone. And just so you understand what Trader Lab is, it's a group of like-minded traders who've come together to leverage their collective experience. And we have all the full range of traders, from novice traders, newbies, if you will, which is fine. They're actually, I think, the new traders have an edge over us old timers who are trying to create profitability and sustainability, because we have to unlearn our beliefs. And we have to change the things we believed in, because most of us have spent years using a process that we're trying to fix but might be defective, but we don't understand that. It's harder, I think. It was harder for me to throw everything away that I spent years working on, because you've made an investment in a process or a belief. You wouldn't have done it if you didn't believe it was the right thing to do. So how do you change what you believe? Well, you don't just flip a switch, I don't think. What you have to do is understand what you're doing that doesn't work, and then try to understand what might work and the work you need to do to prove it. It's like a proof of concept. If you aren't sustainable, and it doesn't mean you don't have winning trades, but if you're not sustainable with your current process, I think it's not realistic to think that all of a sudden you're going to find the keys to the kingdom by doing more of the same. It's more of what I'm doing doesn't work. What can I learn from my investment? And I found that I defined it for myself as Trader Groundhog Day. See why nothing to do here, right? So Trader Groundhog Day. If you're in value, remember, there's no shorts, right? And what does that say? Wasn't this the next possibility? Why would it come back here, by the way? Yes, I am using Friday's RTH. If this is the next possibility, because it was the retail price or high volume. In the microstructures, we're using the same concept, the high volume. And when you break away, we revert back to it. It's called mean reversion. When you come back here, it's mean reversion. If we come back there, it's mean reversion. The market is always reverting to a mean. Makes sense. So let's see what we do here. So again, no shorts, right? Because the condition has changed. What might we do? Well, either you're in park and you're in your Barca lounger, or you take longs now to align with the context. So, but you'll notice the shorts, once we're in value, there's no shorts. And our context grid sheet says, are we in, hold on a second. The previous value area, is it holding? No. What does that mean? The market has rejected the imbalance. That's what was below us. What do we do now? High probability of trading through the value area, especially if it's narrow. The market has rejected the new interpretation of value. So potential to turn into an outside day. Why? The market has broken out of balance and subsequently rejected that imbalance. So we were imbalanced, went down, got sellers in, and now north. So what qualifies? Well, it was shorts until, and right here it was an IBF, a short. I forget where it was. I think it was here. You would have been risk neutral. You'd be taken out and then long here or here. And now you're going for that, and maybe that. Is everybody with me? So there's none of this prediction. What it is alignment. Does this make sense? How are we doing in YouTube? Anybody pass out yet? I'm always concerned about what happens in YouTube. Please leave a like, by the way, if you're there. Helps to support the stream. There's no cost for Trader Lab or the additional education that's in the Bookmap server. All you got to do if you're interested in this, a lot of additional education, large cap, small cap stocks, options, crypto, all various different futures markets, order flow, of course, with a high tier tool like Bookmap, market maker behavior, algorithmic behavior, a lot more. It's all available to you. You know, what's interesting about Bookmap, what I found very interesting about Bookmap is that they invest in traders. Even if you're not a subscriber to Bookmap, it's in Bookmap's interest that you succeed. I don't personally know any other company that does that. So not only do you get specific education, for the product, you also get, programs that can help you extract an edge. There's, of course, Trader Lab, which is no cost, which Bookmap provides, and I provide for you. So all of these things and other streamers are available to you in the Bookmap server. You might want to check it out. And don't forget, guys, Cyber Monday, there's all kinds of sales going on right now for Bookmap if you're inclined, add-ons and the whole thing. So get yourself over to bookmap.com if you want to check it out. I just wish when I started, and I got Bookmap in I think 2015, maybe, can't quite remember, I had to get my checkbook out. So that's all I can tell you. And you know how we feel about getting a checkbook out. I have a guard dog moth in my wallet. So I wish they had opportunities like we now have at Black Friday. So look at our structure. This is our next target. This is our next target. And if we clear Friday's high, we have our ETH high. And remember, what did we not do? Where's that ETH low? We didn't get there. So these are things statistically, and you can learn this in Trader Lab. So getting to the ETH high or low is a 91% probability. Now, when I'm trading the short side, I'm looking for the ETH low. Why wouldn't I? But when we come back into the value area, it changes it all, right? And then I've got to turn the barge around, look for this. Not a recommendation. Hold on. This, and yesterday's high. And ETH high. So I know, what do I know? There's potentially breakout traders and buy stops above Friday's high. So these are areas, and doesn't mean it won't go higher, but that sets up my outside day, which is possible. Okay? Doug, did you get an add-on there? Jano, you need to click the link in the bottom of YouTube. You will need to confirm your Discord username. That's to keep the spamulators out. And then you'll have access to the Bookmap server. And there's all kinds of additional streamers in there, options. Doug does options. Of course, there's Bruce who does order flow. And Bruce's pilot program, it's about extracting an edge. So you understand trading is edge-based and rule-based. Not mechanical, but contextual. So what's the condition of the market? So if it changes, you change with it. So this was next target. Okay. Now, this has a 35% probability. So why would we go for it? We'd go for it because this was the retail price. So what we do here is if we get long, now the long was here, then you're going to get risk neutral. And your job then is to take another scale ahead of this. Now, if you're sitting long, here's what you got to do. Risk neutral. And then where does the trade fail? It's going to fail under here. And if subject to your trade plan, you have to have in your time frame a trade management process. Now, nobody can tell you what that should be. Some traders are going to have it out under here, and you see the sellers. What is happening? Sell stops are coming out. You can see them there. Now they're being absorbed. And the trade either fails under here or right here when it breaks the high volume, which let me show you. And I'm giving you options. I'm not telling you the right way to do this because I don't think there is. What there is extracting the time frame based on your ability to enter and get risk neutral on a timely basis. Yeah. Here is high volume, microstructure. Now you got some here. Now I can't react to this. What do I know? What I know is I get this and I need it to clear that to go higher. It doesn't do it. Now I have more volume here. These guys, you see the delta here and here, they were absorbed by the icebergs. Break, so buyers are here, buyers are here, buyers are there. These sellers were absorbed, buyers are in control. Here, sellers are here, the buyers that are there are here, sellers are here. I need to get back above this. So right here, it's, what are we doing? If I break low, now I know this might be too high, which I don't know until here. And then if I don't clear this high volume, then the teeth are starting to chatter. The high volume is right there. And if I can't get back above this, where the sellers are now in control, now the buyers who were there, right there, if I can't get back above the sellers, trouble. So now I have my buyers in trouble, my sellers in control, my buyers were absorbed, follow the story, my high volumes here. Just showing you. Watch. My high volume is where? Here, there, and there. So if I get short, I can be short against this. I can be short against this, but I'm not getting short. What am I doing? I'm managing my trade. So I'm not getting short. I'm managing along. Now what? Great question. Too high. So I'd be out of my long. I'd have a profitable trade. I can handle it. I would have whatever. So now let's watch. Where are we? Now, nothing to do. This is an outside edge. You see where it was right here was where my buyers there came in, the icebergs. My resistance, the sellers, passive, are there. Resistance, resistance, break low. Let's come back a little further. My buyers were here. My volume is here. Outside edge is here. So now if I can't get back here and I fall under here, then the possibility is to come back. So now again in park. It can do anything here. It can just pull out here, pick some stops if it does, and then come back. Or now this is where we have a bit of mystery. What does this say? Let's look at the language again. If this is too high, and we reject it, then and we fall out of here, we can come all the way back. And then now this is a 30% probability and anything can happen. So, and you have to vet everything for yourself. 30% probability we take out the IB low, which gives us something called a neutral day. The longs are in control at the moment, but if they can't keep going, then the longs from today become sellers. Now, it may not do it today. It may never do it. That's not our job. Our job is alignment. I hope that makes some sense. So this is really, let's just say, it's like you're on the edge of a fulcrum of sorts. It's like you're on the edge of a knife. We can go that way. We can break down. And I can't tell you because that's not my job, but I have suspicions. And as long as we are in this area and we're leaning north, then I think you got to be long. But you got to be very careful right here, because if we can't get back, then we're going to take these longs and throw them under the bus. So let's just watch. Now, I can't tell you, remember, my job is alignment. And the idea of Trader Lab is to help you define and only trade when you have an edge. This is not about a video game. I mean, you can play a video game or gamble. That's okay. I found the business of trading is really more about edge and then not engaging when you don't have an edge, and just leave it. Because there will be trades that you have vetted, that you have confidence in. Now this right here needs to be holding this area. And this is the retail price. So we can come down here. Right here is, I'm kind of in a clueless mode because it could do either. All right. So, because you see where it's on the edge here. So this is just really a tough spot. Depending on your skill and your ability to read microstructure, you can operate in this. I think this is really questionable here. Because either we're going to hold this area and continue higher, get that and squeeze, or if we can't stay in here, then we can break down. That's what I know. As long as we're above the IB and in this area, then long. But it's really kind of on the edge. This is, if it was further away and we were further inside of value, I'd have more confidence in it. But structurally, this is still leaning towards the longs, but it is somewhat tenuous at the moment. It's not broke, but like any trade you take, you have to get risk neutral, and then either you're going to get paid on it or you're going to scratch or manage the trade and come away with a burger. Does that make sense, guys? Please give a like if you're visiting in YouTube. I'm really about out of time. If you're interested in Trader Lab, use the link down there. Trader Lab community, there's no cost. There's a library of webinars as well as a document section and the Trader Lab community. It's really a mutual support group. We're all looking to get better. It doesn't matter how long you've been trading. What does matter is to help you create a sustainable process so you can stay in the business of trading, not play a video game, but build a business of sustainability. If you're interested in that, use the link in the bottom of YouTube, confirm your Discord username, and I look forward to meeting you in the Trader Lab. Don't forget to give a like on the way out. Appreciate you visiting with me today while I sit here in Costa Rica, and I look forward to seeing you guys tomorrow. Don't forget to leave the like. Kind of important. Let's see what this does. This is key for whether the longs get eviscerated or we continue higher. Good luck to all of you. And thanks again for visiting the Trader Lab today.